The first 6 months of the year are over and all things real estate are super exciting. We're going to take a look at some key metrics to determine where real estate is going next in Kingwood. Stay tuned. All right, first metric that we're going to take a look at for Kingwood is number of units sold or number of homes sold. This paints a picture of overall real estate activity. We like to start with this just to see what's been going on. So we've been hearing a lot on the news about there's not a lot of inventory, there's more buyers than there are homes. And when we take a look at the numbers, that is absolutely true. So taking a look at the first 6 months of this year compared to last year, there's been 18% less homes sold this year. So there's not enough homes on the market compared to the number of buyers. This number is down, so that would naturally raise prices as we've seen them do. And then so the next metric that we'll take a look at are prices. So what have prices done? So in Kingwood, we take a look at the dollar per square foot of homes sold, and we compare this again to last year. In orange, we have the first 6 months of this year. It's up 18.9%, so almost 19% compared to last year across the board. Now you see here in the last few months, we've leveled out to about just over $145, $147 per square foot. We expect this to level out. I mean, that was a pretty radical move since last year to this year, up almost 20%. So we would expect prices to level out, to cool a little bit from that perspective. They're not just going to aggressively grow at the same rate. In terms of how those prices broke down, we like to look at 1 stories versus 2 stories and or larger. The story here is, for 1 stories, is that they've aggressively been moving up. You see the 1 stories in blue have been moving up lockstep with the 2 stories, but they've taken a sharp move upward a lot faster. They've been having a lot faster price acceleration than the 2 stories. And why is that? Well, a lot of times people entering the market, they'll get into a 1 story as a starter home. So first time home buyers, also investors like 1 stories. They're typically, easier to manage. And a lot of times people are downsizing. So empty nesters, they may have too much house. They want to get a smaller footprint, go into a 1 story home. And typically in Northeast Houston, in our area, there is less of them, right? So there's less of them. A lot of people want them. So naturally prices escalate and get moved up from that perspective. Next metric we'll take a look at is days on market. What days on market tells us is the amount of time it takes for a home to get under contract after it's been listed. So obviously the less number of days on market, the faster homes are selling. And we're taking a look at the trend here, again, compared against last year. We're following a seasonal trend here. You look at this year as in orange. We're dropping typically at the beginning of the year into summer. Homes start moving faster. Summertime is real estate season. That's typically when most homes get sold. So we see that same trend here, a little bit more volatile, but we can see the trend is the same, but it's at a much faster rate. In fact, homes this year are selling 40% faster than last year. So if you go back to our previous metric in terms of number of homes on the market is down and they're selling faster. Homes selling faster with less number of homes equate to higher prices, which is the reason why we've seen such an aggressive move in prices thus far. Next up in Kingwood is months of inventory. Now, months of inventory is similar to days on market, but what months of inventory is telling us is that if we keep selling homes at that same rate as the days on market that we saw, if we keep selling homes at the current rate, how many months would it take for us to evacuate all the inventory? So all the homes that are on the market now, how long would it take for them to get sold at the current rate? And so typically the lower this number, the higher home prices are because there's more demand, and the higher this number is, the lower home prices are. There's an inverse relationship. And we can see here that in the last 5 years, from 2017 till now, the average has been right around 3, almost 3.25 months of inventory. And then we had a pretty radical drop over the last 2 years, down here sub 2 months. Even then, just less than a year ago, we saw the lowest numbers ever, which was sub 1 month, right? So again, heavy drop from that perspective. And now we've been hovering around the 1.2 month area. And if we look at this from a trend perspective, we won't see right now, prices are going to still stay elevated based off of these numbers as long as we stay below this 1.8 month mark. And if we break above this 1.8 month mark, get back into 2 months of inventory, more homes on the market, would lead to softening of prices. Right now, we're not seeing that based off of this number. We are seeing a slightly more inventory come on, but not enough to really move the needle here. So we're in Kingwood specifically, we're going to still see elevated prices based off of these numbers as the inventory still remains pretty tight. All right, last metric that we'll cover for Kingwood are price decreases. This is pretty fun and exciting. Different market environments use different metrics to kind of tell the story. We like looking at price decreases, especially in this environment, as prices have been going pretty aggressively upward. And so we look at this data for all of Kingwood, Atascocita, and Humble. And what price decreases tracks are the number of active homes that decrease their price. They elected to decrease their price. Why? Well, price decreases are only for one reason, is to attract more buyers, potentially because the home isn't selling as quickly as they'd like it to. So they decrease the price. And we take a look at this information weekly, starting from 1 is the beginning of the year, of this year. So first week of the year, all the way to where we are now on the right. On average, in the whole Humble, Kingwood, Atascocita area, we've averaged about 15 homes per week that would decrease their price. So that's been the norm for so far this year. Up in April, we got a spike, and then into May and June, we got a huge spike, a very, very aggressive run up, and it was into the 70s. I think 72 was the peak, the last reading. And so that's up almost 5 times. So why all of a sudden are there price decreases, right? I thought we were in this hard seller's market, etc. So we want to look at different factors and say, okay, what's driving this all of a sudden? We take a look at one factor, which is interest rates. So we overlaid the interest rate here. This is from Freddie Mac. This is the 30-year rate week over week. And we can see here that as the rate increased, we went up 3.5% to 4% to 4.5%. The number of price decreases on homes stayed relatively flat. It wasn't until we got to the 5% range into the 5.5% range that we saw this huge run up in price decreases. So what this is telling us is that, again, this is not the exact cause for these price decreases, but if we look at the correlation, the trend is telling us that buyers were really unaffected by interest rates as they approached 4.5%. Once they got to 5%, this created a lot more sensitivity. They became way more sensitive to that into the higher interest rates that we've seen recently. So, you know, what this tells us is that we're going to continue to see the same trend as long as interest rates can stay elevated. We're going to see that a lot more people are going to decrease their prices. So what does this tell us? This tells us, number one, that buyers are not as interested, right? At these rates, the affordability for them or the value to them is not as high. Number two is that sellers potentially are just too greedy, right? They've been continually trying to ratchet up their sales price to continue to push the market higher, push prices higher. Again, if you remember from our other slide, we're up almost 20% year over year. They want to continue to push this price higher, but I think we've reached a point to where they can't push it any higher. That coupled with interest rates, buyers are just losing steam. So now they're starting to pull back and then drop their prices accordingly, right? So again, if we see interest rates drop from here, right? If we see a dip in interest rates, then we would expect to see continued increases in prices. But as of right now, we see things leveling off. Reason being is because if the interest rate continues to stay at this elevated rate, we'll also continue to see prices start to come down. Those are the key metrics that we had for Kingwood. In conclusion, we still see prices are elevated. We're up about 19% compared to last year. We do see some leveling off. There's a little bit of cooling in prices as inventory slowly comes back on board, as well as we see additional price decreases for the homes that are currently listed. In addition, we expect to see the potential for interest rates to drop. Again, interest rates had pretty aggressive move upward, so them pulling back a little bit and settling is to be expected. So if you're a buyer out there, be prepared. If the rate comes down and you see a home that you like, make sure that you're able to put in a solid offer very quickly so it can get seen by the seller. And also, if you're a seller out there, keep in mind that there is more inventory coming in on the market. So you want to be able to still position your home to be the best fit possible for buyers out there and still be able to take home maximum value. If you want to take advantage of today's real estate market and get a customized plan based on your situation, feel free to reach out. We're happy to give you a no strings attached free consultation for both buyers and sellers. Don't forget, if you like the content, please subscribe and also like our videos. I'm Han Jones with the Sweet Life Real Estate Group in JLA Realty, giving you the best real estate and trends in Northeast Houston and helping you live the sweet life. We'll see you next time.